Hello, my friends. This video on day trading stocks is given to you by me, Dr. Barry Burns at Top Dog Trading. And I'm going to show you a technique today that you probably haven't seen before, and it is game-changing. So here we go. I've been trading for 49 years, and I've seen the markets change a lot. And one of the ways that it has changed most dramatically is with the advent of various computer technologies into the trading arena. So, for example, now everybody has direct access to the markets. Also, commissions have come way down, so the price of entry and exit is less. High-frequency tradings come in, logarithmic trading, decimalization, and all this adds up to allow people to get in and out of positions faster and make money. Now, the effect that has had on trading and on charts is that charts have become choppier. And people ask me this, hey, does it seem like the markets are more chaotic and choppier than they used to be? And the answer is absolutely yes. So we don't see trends as much as we used to, especially when you're day trading stocks, for day trading, where you got to be in and out during the day. So, for example, and you can check up all the examples you want. I know this is just a few, but this is very common and representative. So look at this. The market really doesn't go anywhere this whole day. This is the day between there and there. And does it go up? Does it go down? Now, pretty much goes sideways. So the next day, we come down, and yes, we start in a down move. That's not really a trend, it's just a thrust to the downside. And then what happens after that? Do we get a trending day? No. After that, after the first whatever, hour, the market just goes nowhere from there. Again, pretty common. What happens the next day? Well, again, kind of the same thing. We get a thrust up that doesn't sustain to the upside, so the trend doesn't sustain. Wait, one thrust down, and there's no more trending to this market at all. Thrust up, thrust down, and then just goes sideways. No sustained trends, no sustained direction. Same thing here. We get a little bit of a move up. Now, here we get a three-wave pattern, which should qualify as a short-term trend, but it starts the day before. So for a day trader, we'd have to start here, and after this point, there's no trend that continues. And then in the afternoon, well, one of my other YouTube videos talks how to take the afternoon trade, and that's the afternoon trade there. We usually get a move right after lunch. But that's not really a trend either. That's just one thrust. See, look at your cycles. For a trend to go, you've got to have at least 3 to 5 cycles going to make it a sustained trend based on the definition of trend. Oh, by the way, if you want my cycle indicator, I do make that available to my YouTube subscribers for free. Just subscribe to YouTube and send me an email also, and here's my email address, and I will send you the cycle indicator. We do webinars on that pretty frequently. So anyway, same thing here. Let's just finish up with this and show you what I mean. So here we did get a 5-wave downtrend, which would qualify, but it's interrupted by the middle of the day. So by the time you're starting as a day trader, it doesn't sustain anywhere. And then it tries to go to the upside. We get a little 3-wave trend, but again, not a long sustained trend. And then the final day here, it's just sideways. All right, so what do we do about this? Is trend trading dead for day trading stocks? Well, the answer is no. There is a way around this. So first of all, you can go to a shorter term time frame. Actually, that's what you have to do. You have to go to a shorter term time frame. Now, you could try a 2-minute chart or even a 1-minute chart. It still won't work as well as what I'm going to show you now. So the optimal way to accommodate all these changes that have occurred is to go to tick charts. And a tick in this context is a trade. So as we pull it now, see, here's the same chart we just looked at, right? And look at the trend. See, it's the exact same market. All we've done is changed it to tick charts and tick bars, I should say, and we see these trends. So what this is now, these bars are lasting shorter than 5 minutes. So we're looking inside, I call it the fractal energy, instead of a fractal of what you were looking at before. It's a smaller scale. It's doing that. That's number one. Number two is that we're not using time-based bars. Each one of these bars can last a different amount of time. Each bar lasts for 300 trades, and when trade 301 comes through, then the next bar forms. What this does is it tends to create smoother chart patterns. It creates a more rhythmic pattern because you're incorporating volume into the trade pattern as well. So it's not actual volume because it's really just the trades, and each trade can have a different amount of volume, but you're still taking a form of volume in the sense of how many trades are coming through. So you see, that same market that was so choppy before, now all of a sudden we can do trend trading on it. So let me go back, and actually I'll show you a couple different examples here. I don't want to move the screen around a lot. You're still going to get some chop, by the way, right? You're still going to get some chop because sometimes that's just what the market is doing. It's being chaotic. But we're still on the same day, and here we got a nice 7-wave trend. So basically you look for this in the morning, and then lunch is going to be choppy normally, and then in the afternoon. So this is your morning trend, that's your midday chop, and that's your afternoon trend. And that's the type of thing you will typically find. So try it out. There's no best number of tick intervals, by the way. I do have an article on that on my blog. If you're interested in how to choose the best time interval for your charts, feel free to email me and I'll send you that article, and I'll be happy to share that with you for free. So that's it for this particular video. So if you like this video and you're watching it on YouTube, please click the thumbs up icon below and leave a comment, because that really encourages me to create more free tutorials for you. Also, I'm giving away one of my favorite trade strategies called the rubber band trade. It has an extremely high win-loss ratio. It's a very simple strategy. You can learn it in about 26 short minutes. Get that video explaining the trade strategy absolutely free by clicking in the image in the top left corner, or if you're on a mobile device, go ahead and click on the little eye with a circle around it in the top right corner of this video. And if you're not watching it on YouTube, then there's a link below the video or an opt-in form on the side. Once you do that, I'll personally email the video to you.